Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. December corn is little changed today, and it appears that we'll finish the week inside of the trading range, where overhead resistance has been at about 353 and downside support has been at 344.25. The market continues to oscillate around its nodal phase, which sits at 348. And we believe that once the market's able to break either side of resistance or support near the 344 or 353 number, that we could see some continuation. Although we are running out of time for the December contract since we are only a couple weeks away from first notice date. The next important timeline ahead for the December contract coincides with Thanksgiving at November 23rd. But from here, what we anticipate is that the market will continue to narrow as we can see the volatility-based bands continue to get closer and closer together. The downside bands are sideways, but the overhead bands are pushing lower, which suggests that there may be one more push to the downside before corn is able to find a significant low. The March contract is trading in a similar fashion with its nodal level sitting at 363. And given that this market now has its nodal level of 363, downside support and resistance are similar to that of the December contract. From here, we can see that the market came in on the November 7th timeline, and there was little change from here. So the market appears to continue to want to trade sideways. The next date of significance again comes in at about November 23rd, and from there we'll continue to monitor the way in which this market runs. Resistance overhead sits at 366.5. And we have support down below sitting at about 355. And if the market were able to break through this number, we're looking at a downside target that lives at about 347.5. After shaking off a big drop on Friday, it looks like soybean is continuing to make its way higher over the last 3 days. It appears that the market may make a run up to resistance, and the next key level of resistance that we're looking at right now sits at about 1,007. If this market's able to get to this number and actually breach this number, we think a number somewhere close to 1020 may be possible before the next run down for this market. We also have a potential time factor coming in near November 16th. Both of these factors look to play a role with regard to how the market moves over the next couple of weeks. So look for key resistance sitting at about 1007, followed by the potential of reaching 1020. And again, we're looking at next week as a potential turning opportunity for this market in the event that it's not able to make its way much higher. In addition to finding resistance at the 1007 mark, we've also have taken a corresponding measurement of the market swing where we want to look for a mirror move. Looking at the initial low followed by the next high, we took this measurement from the next low, and a 0.618 or Fibonacci retracement expansion lands very close to that 1007 number that we're looking at. We have several indicators coming in with confluence pointing towards that 1007 number. We have the low range of volatility-based resistance coming in right at that 1006 number, in addition to a Fibonacci level, and then we have the 1005 half. With all those pieces coming together, that suggests that that 1007 number is very important to this market, and the way in which it responds to this level should be taken into consideration. December wheat is moving very much as expected, and as you can see from the chart here, the market came down and reached our downside target. From there, it's bounced a couple days, and right now it's found resistance up against our downside 1-by-1 angle. The market did come down today after about a 3 to 4 day pullback, but it has since recovered from those levels, and the key now is whether or not it's able to break above this 1-by-1 angle, or if it breaks below the previous low that it's made. Whichever level that it breaks first suggests that the market could very well have follow through in that direction, and then the next major level of resistance in the event that the market were to move up sits at about 440.5. At this point, we do believe that wheat is poised for a major low to come in the coming weeks. When that does happen, we'd be looking for confirmation potentially of a higher low to post, and from there we'd be looking for potential long opportunities. Long opportunities for wheat would be better suited in the March contract, considering that we're only a couple of weeks away from first notice date for the December contract. One of the things that has alerted us to the possibility of the market putting in a major low is the way in which that momentum is dwindling. Back in August, this contract made a significant low, and the most recent low that we saw from last week made a lower low, but the momentum from which this market made those lows has been decreasing. This type of movement is what we consider to be divergence. With the market making this very strong divergence, that gives us cause to believe that this market is poised to make a significant low very soon, and upon doing so, once it's able to break above some key thresholds, that the longs for this contract could very well be in play. One of those confirmation levels is perhaps if and when the market's able to get above our sinusoidal wave factor. And upon doing so, perhaps somewhere near the 458 to 460 number, if it happens over the next couple of days, would be a very key indication. Beyond that 460 number, we would have key resistance potentially sitting at about 466. And you can see from the market here that our volatility bands are also starting to point downward. Upon making a shift, and if the market's able to break above these volatility bands, this market could very well be on its way to higher prices. December crude has broken out very nicely beyond our 54.80 target, and from there the market has gotten very close to our 58.40 target up overhead. It does bear mentioning that we do have an end band of our volatility bands having been posted, which suggests that the market could very well be exhausted and we could see a pullback. In the event of a pullback that holds above the 53 number and turns back up, this market can continue higher. That follow-through should be made in the next contract, given that the December contract is coming to an end very soon. We'll finish up today with a look at the US dollar index. The market continues to struggle with the $95 mark that we had mentioned before, with the market having found and reached our key target level at that number. The possibility still remains for the market to come up and test somewhere in the neighborhood of $96, yet that remains to be seen. We want to see whether or not it's able to get beyond the $95 mark, and in doing so, we can see a market that makes a potential run slightly higher. We do anticipate that some resistance should come into play. We've looked at some of the other constituents that make up the US dollar index itself, and those currencies themselves are starting to make a turn in the other direction. In doing so, that potentially looks to put pressure on the US dollar with those currencies looking to turn up. And so the combination of those factors coming together could mean that the dollar index is due for a potential pause or for some significant resistance near these levels that we see. We'll continue to monitor the way in which it responds to this level here, but again, an upside movement to about 95 with the possibility of reaching 96 is still possible. We also want to bring to your attention that in the event that the US dollar is able to break above 96.70, getting above that number would be of significance, telling us that the market would potentially make a run to about 98 at a minimum. Thank you so much for joining us for our weekly market update. Look forward to touching base with you again next week.